Chess Company uses LIFO for inventory costing and reporting the following financial data. It also recomputed inventory and cost of goods sold using FIFO for comparison purposes. Compute its current ratio, inventory turnover, and days sales in inventory for 2011 using LIFO numbers for Part A and FIFO numbers for Part B. Using 365 days a year, do not round intermediate calculations and round your final answer to one decimal place. So let's look at LIFO ratio computations first. LIFO, the current ratio for 2011, would be 210, which is the current assets using LIFO, divided by 190, which is the current liabilities. And the current ratio under LIFO would be 1.1 under LIFO inventory. LIFO inventory turnover for 2011 would be 730, which is the cost of goods sold for 2011 under a LIFO assumption, divided by the sum of the average, which is going to be the average inventory, which would be 150 plus 100, and that would be the LIFO inventory for 2011 and 2010, because the end of 2010 is the same thing as the beginning of 2011, so you add these two together and divide by 2, and that'll be the average inventory. So it's the average inventory divided into that 730 cost of goods sold, and that would give you a 5.8 inventory turnover under LIFO method. Then we have a LIFO days sales inventory for 2011, and that would be 150 under the LIFO inventory divided by 730, which is the LIFO cost of goods sold, and that number is then multiplied by 365 days to give you a rounded off to the nearest day 75 days of sales in inventory under the LIFO method. Now we're ready to go to FIFO, and this is where some people fall off the wagon at. Under FIFO calculations, here's what you need to understand first before we do these. The FIFO inventory is $70 greater than the LIFO inventory. So here's the FIFO inventory of 220, and the LIFO inventory is 150, and therefore there's a $70 difference. Now, when you do a calculation for the current ratio for 2011 under FIFO, what you have to remember is that the current assets using LIFO were 210. Well, everything else is the same with respect to current assets. Cash, accounts receivable, prepaid expenses, all those current assets are the same. The only thing that's different is the way we calculated inventory. So if the inventory was 210 if the current assets were 210 under the LIFO calculation, they're going to be $70 higher under a current asset calculation for FIFO. So the 210 now becomes 280. The current liabilities stay the same, and the FIFO current ratio using FIFO as a method for inventory is going to be 1.5. Inventory turnover under FIFO for 2011 will be the 685, which is the FIFO cost of goods sold, divided by the average inventory for FIFO, and they gave us the ending balance for 2010 for FIFO inventory, which is 125, which is also the beginning balance of 2011. And we have the ending balance for inventory under FIFO for 2011. Add those two together, divide by 2, and divide that into 685, and the FIFO inventory turnover is 4.0. And then the last thing is the FIFO days sales inventory for 2011. It'll be the 220, which is the FIFO inventory, divided by the 685, which is the FIFO cost of goods sold. That number, or that combination, times 365 will give us a 117.2 day FIFO days sales and inventory.